Are you hoping for prices to fall next year so you can get on the property ladder, or are you hoping that prices continue to rise? Current trends would indicate that prices are continuing to rise. So far, prices are up about 7% on the year to date, or 0.77% per month up to September's prices on actual sales that have completed. I predicted at the start of the year that prices would probably increase by about 5% on the year as a whole. I did suggest that prices would increase faster at the start of the year and then slow down towards the end of the year. That still may happen, but overall prices are going to likely be more than 5% as I predicted at the start of the year. You're likely sick of it by now in terms of how much we've heard about it, in terms of how much we've heard about the US and the UK markets crashing, also about the stock market and the crypto markets falling or being in fluctuation all the time, higher interest rates, higher inflation rates. And there's a lot of predictions out there that are suggesting that the housing market in Ireland is going to crash. But there's no clear signs of that yet. I'm not a big fan of comparing the US market to the Irish market. It's not really that comparable. The US market is far too big. It would be perhaps better to compare the US markets to the European market as a whole, because some of the markets or states within the US might be falling and others might be rising. It's the same in Europe. You might have different countries that are rising or falling in Europe. So comparing the entire US market to Ireland is just not telling us enough information, because the fundamentals just aren't the same. It's like the fundamentals in LA aren't the same as they are in Miami, or Dublin hasn't the same fundamentals as Rome. But it is a good idea to keep an eye on the trends that are happening, including the stock market and even the crypto market, because the crypto market has become incredibly in line with the financial markets now. It's also important to look at what some of the larger funds are doing, and some of you may have already heard about Blackrock's intention to restrict sales or drawdowns of their 125 billion real estate fund. And I saw that there was some Irish reports out there suggesting that this is a worrying sign for Irish real estate as a whole. I kind of get the feeling that this has perhaps been a little bit overhyped, particularly when it comes from an Irish real estate point of view. The fund in question had a lot of links to China assets, and therefore there's a good reason why investors wanted to pull out some of their cash. But it's also to do with BlackRock's own success over the last number of years, because they've been so successful in raising huge amount of equity that they have all this money, and it's only probably natural that some investors who have pumped so much money into BlackRock are getting a little bit of cold feet at the moment. I think what's actually more telling in terms of this story, and perhaps it's good news for the property market as a whole, because funds like BlackRock are restricting sales or drawdowns of the actual fund, which means that they're not being forced into selling off assets quickly at perhaps lower values than the market or what they would expect to get for those particular assets. And therefore, there's not going to be a run on the market, or they're not going to have to offload assets very quickly. The fund managers in the likes of these funds within BlackRock probably have the ability to restrict drawdowns, etc., which that means they can decide when to sell off assets and not be forced into selling off assets below the market value. Unlike the last crash, when the bank stepped in immediately to get some of their assets back, they forced sales quite quickly. Equity funds who've been raising cash over the last number of years to buy real estate have got far more heavily involved in commercial real estate over the years, and it's far more common that it's equity-based funds that hold some of these properties, unlike in 2008 when there was a lot of bank loans associated with commercial real estate. So this time, the equity funds probably have the ability to sit and wait for this downturn to kind of pass before they have to make any decisions to sell, which will result in a little bit of a different outcome compared to 2008. So rather than actually seeing BlackRock's restrictions as a sign that the market is going to crash, perhaps we could look at it or see it as a way that there will be a controlled, perhaps slow down or controlled sell-off of some of these assets. And therefore, I do not think there's going to be a mass exodus of funds from Ireland anytime soon. While we are talking about BlackRock, it was announced by their CEO this week that tokenization will be the future of real estate. I think it is going to be interesting to see how funds like BlackRock set up the rules around tokenization themselves, particularly when they are restricting some of their sales, and how that would work for a tokenized fund. But I do think Tokenization of real estate is the future. It's something I've been looking into for the last year or so. The regulations around it are quite hard and difficult to get around, but I think they will change quite quickly once funds like Blackrock want to get involved, and the rules will change quite quickly. If you do want to know more about this, make sure you stay subscribing to this channel, perhaps even check out the links below and join our mailing list, because it is something I will be talking about a lot more into the future. So while there may be concerns internationally in regards to funds like BlackRock putting restrictions on their investors pulling out money, what I think is more concerning for the Irish market right now is that a number of builders and developers are deciding to leave the market, and some of them are deciding to leave the business completely. I was quite shocked when I was back in Ireland a few weeks ago that I heard a number of rumours of builders leaving the market, and sometimes it came straight from the horse's mouth that they were deciding to leave the market. We all know that landlords have been documented, or we all know that it's quite documented well that landlords are leaving the market, but I think it's only now that people are starting to see that developers and builders are also starting to leave the market too. Some of these builders and developers have been around for decades. If they weren't wiped out by NAMA in 2008, them giving up now is kind of quite concerning. In some cases, they're giving up because perhaps the next generation just doesn't have the will to take on the business, take on the risk of development, or the headaches that come along with all the planning issues. But in many cases, it's because there's a lot of uncertainty around planning. There's too much risk involved, the time it takes to get planning as well. This, coupled with increase in building costs, is leading to a lot of them making the decision to step out of the market. And it is because building costs are rising all the time, coupled with planning permissions being delayed all the time, and the uncertainty around the actual overall cost and perhaps even the profits that might be made is just getting too big at the moment, and a lot of them are stepping out, which will have major consequences for the market as a whole over the next decade. One of the biggest architect firms in the country, Henry J. Lyons, announced the other day that they were letting go up to 20 staff because the pipelines of projects have just dropped off going into next year. It is also evident within the development sales side of things that there has been a dramatic fall off in demand, where the total volume of sales in terms of price is down by 74% compared to last year, which is a huge drop, meaning that there is less and less demand for development sites. And this is a factor of a number of reasons. One, because land prices haven't been reduced to reflect the fact that construction costs have gone up so much, but it also indicates that developers are just so frustrated with the planning process and the system that their interest in development land has dropped off nearly completely. So what does that mean for 2023 and the housing market next year? Before I move on to 2023, let's just take a quick snapshot of the market in December 2022. There are just over 20,000 units on the market nationally at the moment, down 1.5% on last month, but I wouldn't read too much into that because we are coming to the end of the year and a lot of people will wait till next. Nationally, price remarks are at about 6.7% nationally, meaning that the asking price on 1 in every 15 homes has been repriced in the last month or so. I'm hearing from the media and other agents that price remarks are happening quite a lot at the moment, but this kind of figure suggests that it's not a huge amount more than average at this time of year, or perhaps month on month. Nationally, the average asking price is 349,000, which is an 8.4% drop on last month. But those of you who know me and have watched these videos before, you know I've said this many times, I don't put a huge amount of stock in average asking prices, particularly month on month, because they can vary so much. In regards to the Dublin market, there is about 4,500 on the market, a drop of 2.3% on last month. From a supply side, again, I wouldn't put a huge amount of stock into that figure because it is Christmas time and we are going to see less units coming onto the market because people will be holding off till next year. The average asking price for a house in Dublin is 519,000. This is a drop of 4.8% on last month, but again, don't put a huge amount of stock on the average asking price month per month because they can fluctuate so much depending what's actually on the market. The demand index for Dublin is still extremely strong, and the number of remarks or asking price changes in the last month is about 5.8%, slightly higher than normal, but again, not a dramatic change. So what is likely to happen in 2023? What do you actually want to happen yourselves? The market is crazy at the moment and no one is going to argue with that, and making forecasts is a little bit harder. But is the world crazier than it was in 2020 or 2021? I would say that it actually isn't as crazy, even though there is still a lot of uncertainty. We have high inflation, we have tech job losses, we have a war, we have crypto and stock market fluctuation all the time. The US and the UK housing market is showing signs of significantly slowing down. We still have interest rates hikes forecasted as well. And there's a whole host of other scary things to think about too. But in terms of the main indicators of how property prices might go, employment, inflation, interest rates, and GDP, they're all kind of pointing in the kind of direction that would suggest property prices will continue to go up. We still have high employment. We have plenty of professional service companies announcing more jobs. We have high GDP. We have a huge amount of cash on deposit. Supply of new properties coming onto the market is going to be limited, and rents are at an all-time high, meaning that it still makes sense for a lot of people to actually want to buy rather than rent at the moment. We also have changes in the lending rules coming into effect in Ireland in 2023, which will allow second-hand buyers borrow more, and therefore this will result in increased demand, and will push up prices slightly. However, because second-hand home buyers will perhaps be able to sell their existing home far faster because they won't have to have built up that 20% deposit, it may mean more supply will come onto the market from the second-hand home sector, which perhaps might counteract any kind of increase in demand from the reduced deposit rate. There's a lot of reports coming in from agents that there is less bidding wars taking place at the moment, and houses are selling for in and around their asking price rather than 100,000 over asking. But there are still competitive bidding processes happening at the moment in high demand areas. It's also clear from a lot of agents that cash is still king, particularly in upmarket areas in Dublin, that cash is still dominating most of the bidding process. Demand for ready-to-move-in homes is still quite high, and those type of homes are selling quite quickly. The market is considerably slower for homes that need refurbishment, which is understandable given construction costs are so high at the moment. Looking at some of the overall trends in the US rather than looking at the particular market sectors, one of the trends that has come out recently or has been reported a lot recently is buyer's remorse, particularly buyers who bought during COVID and during lockdown who moved out of the city. They're now looking to sell, and in a lot of cases they're taking discounts of 100 grand plus to get back closer to cities, to get back closer to schools, hospitals, colleges and the workplace. And I would expect something similar to happen in Ireland with this overall trend in mind, particularly with buyer's remorse, etc. in some of these locations. I do see that translating a little bit to Ireland, and homes that are based on remote working in rural areas, I think the demand will drop off and they will be slower to sell as well. Before anyone accuses me in the comments of trying to pump up or push up house prices because of a vested interest, I'm not involved in selling any residential properties and I don't have a vested interest in that regards. The way I would see it is if market conditions remain the same, I would expect property prices to increase slightly in 2023, perhaps by about around 3 or 4%. And I would put that as the slight favourite, perhaps at even money, mainly because supply won't increase dramatically in 2023 and new supply will actually suffer as well. I would put a slight market fall of -1 to -3 at about 2 to 1. There is a chance that the market could fall next year, and that could happen because of major falls around the world, and that could trigger a drop in confidence. But at some degree, I also feel that that has already happened in a lot of cases, and demand still remains quite strong within Ireland. For those of you who are hoping for a crash, I put the odds of that at about 10 to 1, if not more, as it is really the outsider. I know I'm going to get a lot of questions within the comments asking, is now a good time to buy a property? If you were going to ask that question, please let me know in the comments. Still comment on this video, it really helps me out, and I love to know that you're engaging with the video as well. Answering the question is not that straightforward. If it was an investment property, it would have to be a great deal for you to buy, but if it's your family home, you have to ask yourself, what is the greatest risk? I.e., do you buy now when prices drop, but you still have a home to live in, your life doesn't change, and your repayments are affordable, and you have a home to stay there for as long as you need to? Or do you wait to buy, Take the chance that the market will fall. Let's say you are right in that scenario and the market does fall. How long do you have to wait for the market to hit the bottom? In 2008, it took about 5 years to hit the bottom. Do you wait all that time to buy? If you do you have to factor in all the rent that you're going to have to pay? And will the market fall to cover all the rent that you have to pay every single year? As well as, will your ability to buy be the same? You're 5 years older. Will you have the same access to a mortgage at that period? Is the cost of waiting justified? And let's just say you get it wrong. Let's just say the market goes up and continues to go up, but you hang on a year or two to wait to see what happens. You paid a year or two rent and values are now even higher. Is your ability to buy got even worse, and therefore your property that you can purchase at that point in time is even less than what you can purchase right now? So they're the factors I think you need to weigh up and ask yourself if you are hoping that the market will collapse or fall. I think it's important to ask, what is the bigger gamble? What is the biggest risk? Buying now or waiting? For those of you hoping to buy, price increases and inflation are actually your friends if you have a mortgage. If house prices didn't go up over time, there'd never be a point in getting a mortgage. Assuming a 500,000 property purchase today, assuming an average growth of about 4% over 25 years, that property should be worth approximately 1.3 million in 25 years. That sounds crazy, right? But think of it a different way. What happens if you were to borrow 450,000, let's say on an average interest rate at 3.75% over those 25 years? The total mortgage, or your total cost of that mortgage, will be approximately 700,000 plus the 500,000 you paid for the property, totaling 1.2 million. So that 1.3 million valuation in 25 years time, does that seem all that crazy now, or does it seem quite critical that that's what actually happens to justify paying for a mortgage? Let me know what your thoughts are in the market below in the comments. Let me know what you think will happen in 2023 in terms of price increases or price decreases. I'm Shane Fleming. For those people who don't know me, hopefully you'll show your support for this video by giving it a like. Make sure you subscribe to the channel for more information. And as always, thanks for watching.